Alright, so welcome to my channel. This is Nexon Capital. Today is 26th of March 2026. Okay, currently we're having a structure on gold USD and silver USD. Okay, and at Nexon Capital, our framework has always been the same. We're trading with data, time, and order flow. Okay, data is always, let me say, the trigger for an explosion in price, and time is, let me say, closely aligned with data, and order flow simply refers to market structure, whether we are in a bullish mode or bearish mode. Okay, so with this area that I've marked, we can see that there's a gap in price at this extreme zone of this swing. The same thing on gold USD. With this swing that we're having, the extreme range, we have a gap here. So we're going to narrow ourselves to this price range to find the economic data that was responsible for this gap. Okay, so we're going to go to Forest Factory. So where is our structure? With this candle, we're going to look for, we are on a weekly time frame. Okay, so we're going to look for the week beginning with 17th November, and that is where we're going to look for economic data related to the US economy. Okay, so when we go to Forest Factory on 17th November, we're going to see individual perspective from FOMC members, and these are sometimes going to be relevant for our inflation and employment trends. But in this case, we had FOMC meeting minutes that came in on 19th of November 2025, and this is going to hold much more let me say much more data than the individual perspective of the FOMC members. So I've opened the data right here. Yes, I've opened the data right here. This is the November 2025 report, and when you look at here, the November report is the report for the October. Okay, the FOMC meeting minutes is always released 2 weeks after the meeting. Okay, so this report is for the October meeting. So when we get a report like this, we're always going to pay attention to the economic outlook. That is where these major players in the FX and in the financial markets pay attention to, because that is where you get a clue of future expectation of inflation trends and employment trends. So this is our section that we're going to look at, staff economic outlook. Okay, so let me explain this real quick. Currently, the Fed is on a wait and see mode. Okay, the Fed is actually cutting rates, but inflation is not giving them the chance to cut rates. Okay, so they are on a hold right now, trying to assess inflation trends. If they see inflation coming down, then they're going to support the economy with lower interest rates. If inflation is not coming, then they can decide whether they are going to prioritize inflation fight over employment. So that was just brief explanation of what is actually going on. But before, when we were in November 2025, when the data came in, market saw that as a dovish signal. So that is where we had this explosion, or we had gold appreciating against the US dollar, and silver also giving a follow through with that. So with gold USD, let's look at the gold USD. You can see a beautiful rejection from our zone. So let's look at the data. So with the data, staff inflation forecast was broadly in line with blah blah blah. We're not looking at this one, but this is our key area that we have focused on. With tariff increases expected to put upward pressure on inflation in 2025 and 2026, thereafter inflation was projected to return to its disinflation trend. So the Federal Reserve was actually seeing tariff increases. The tariffs that was initiated by the President Donald Trump, they saw that tariff increases putting upward pressure on inflation in 2025 and 2026, meaning that markets read that inflation was going to be higher because of tariffs in 2025 and 2026. So after 2026, that is where we're going to see inflation coming down after 2026. Okay, so market saw that as a dovish signal. Market saw that as inflation coming down after 2026. So they preferred the gold, or they saw the Federal Reserve going to be dovish in the medium term. So they preferred the gold over the USD and the silver over the USD. Okay, and with that, we are going to follow the FOMC, the meeting minutes report for inflation trends. So when we look at Forest Factory, here. The next report that came was on December 2025, and this December report is going to be the report for the November meeting. Okay, so I've opened that report to here. That's the report. The Federal Reserve made that statement again. They said that tariff increases were expected to continue to put upward pressure on inflation this year and next year. This year and next year is 2025 and 2026, because when you look at this one, we are still in 2025. Okay, they said we're expected to put upward pressure on inflation in 2025 and 2026. And with this report, they are making the same, they were affirming their stance in their previous minutes. They said tariff increases were expected to continue to put upward pressure on inflation this year and next year. Okay, this was actually in line with what they said in their previous report. Okay, but that wasn't a trigger for us to buy. We need something more extreme than this before we can look forward to buy from this price range. And the next report after the December report was, let's go to the December report, and the next report after the December was the 18th February 2026. So I've opened that report here, and look at what they said about the tariffs. They said, with the effect of higher tariffs on inflation expected to wane starting around the middle of this year. We are in 2026. In their previous reports, they said inflation was expected to put upward pressure. Tariffs were expected to put upward pressure on inflation in 2025 and 2026. Okay, meaning that the entire 2026, we are going to see tariffs being putting upward pressure on inflation. But when we got into 2026, in our first report that we had in 2026, they said that with the effect of higher tariffs on inflation expected to wane, meaning that right now they don't see higher tariffs putting upward pressure on inflation. Okay, they said with effects of higher tariffs on inflation expected to wane starting around the middle of this year. So this is a lower revision of tariffs. They don't see tariffs putting inflation. This is a, let me say, a dovish trigger. Again, we are having an additional dovish trigger. So currently it tells you that the Federal Reserve is going to be dovish, aggressively dovish. So it's going to, I don't know how to put it. The Federal Reserve is not going to, it's going to cut faster. Yes, that is the explanation, because right now they don't see the tariffs putting upward pressure on inflation again. Okay, so the Federal Reserve is going to cut faster, or is going to pivot toward rate cuts earlier than anticipated from this price zone. And this is a dovish signal for us to buy from this price range again. We can say that that is the reason why we're having this beautiful rejection from this price zone on gold USD. And currently, you can look forward to buy from this level. Okay, and target the swing high. Okay, our stop is just going to be below the swing low, but the ideal entry was around this price zone. We were supposed to enter from this price zone, and our stop loss was going to be below this low. And with silver USD, we are waiting for price to come to touch this price range. Okay, so currently with the trigger that we have from the tariffs being waning in the middle of 2026, it means that the disinflation trends that they stated from this price range is going to happen faster than earlier. It's going to happen faster. So we are currently buying from this price range. Then we are targeting this high. Okay, there's a positive, or let me say a high risk to reward that every trader will be praying to get. So the market is always unpredictable, but we're trying our possible best to reduce our risk or avoid let me say avoid the noise in the market. So we're currently buying silver gold USD, but with gold USD right now, we are waiting for price to come back to the zone and touch it. If price don't come back, you have to admit that we had our entry here, just that we missed it. But with silver USD, we've not missed the trade. We have to wait for deeper correction into the zone, and we buy silver USD rather. All right, so that is just it. I'll end the video here. See you in my next video.